So very good morning and thank you for all for joining us for our H1 FY19 earning calls. Suzlon team takes this opportunity to wish you a happy Diwali and prosperous New Year. Present with me during these calls are Mr. J.P. Chalsani, our Group CEO, Mr. Kitti Vagadia, our Group CFO, and our Investor Relationship team. I hope you had an opportunity to review our result and investor presentation. I will share with you an overview of the industries and my team will walk through our H1 FY19 performance. We will then take your questions. The transition, there is now a clear growth visibility for the next 3 to 5 years. The 10 gigawatt of the bidding has concluded till date and another 10 gigawatt of the bidding is already announced by government up to the March. So H2 FY19 will see a more ordering of the turbines to OEMs and huge execution activities from during FY20 onwards. The opening volume for FY20 would be nearly 18 gigawatts for the industries, which is a very good pipeline for the next 18 months. So it gives a very strong visibility of the visibility of the business for the next 18 months by end of this year. The government is encouraging the industries to achieve the 60 gigawatt targets for the winds by 2022. So it's quite ambitious, but it is achievable. Here, India is positioned to witness another 33 gigawatts, which is almost the last 20 years which India has done 34 gigawatts. We see the 10 to 12 gigawatt of wind biddings in a FY20 and FY21 and onwards. Giving a strong long-term volume visibility to the wind sector, it is a great opportunity for sector to grow in long-term sustainable growth. The tariff continues to slowly inch onwards because it's now stabilized and going forward it will continue to go upwards. In the current year we shall see the auction of the wind solar hybrid and offshore wind project will be concluded. Out of the 5 gigawatt plan of the offshore, first gigawatt offshore UI has been a huge interest from the around 30 investors. Additionally, we will see India's first wind solar hybrid auctions of 1.2 gigawatt in H2 FY19. Apart from auctions, the country has a very active market for the retail, captive and PSU segment that continues to grow every year. There is a huge new opportunity for repowering the market for the next 2 to 3 years. So now I invite my team to take through our H1 FY19 performance.
Thank you, Tulsi. Good morning to each one of you. I am Chalsani here. As mentioned by Tulsi, India is at the cusp of high growth phase. We now see the industry poised to leapfrog to the next level of growth. With this, FY20 is likely to see a new high of 8 gigawatt plus in terms of the capacity addition, even if we consider just the bidding happened till date. For the project execution, service and technology will continue to be our key competitive differentiator. We will launch a strong presence across the entire value chain and customer segment positions us to capitalize on this opportunity. We continue to maintain our technology leadership in India through India-focused solutions such as raising need for bigger, larger turbines for a higher yield but without any cost increase. However, we need to be mindful of infrastructure constraints for logistics, thus requiring specifically India-focused R&D efforts and solutions, which is what Suzlon is known for. In the last quarter, we introduced India's tallest 140-meter hybrid concrete tubular tower on our 120 rotor-dia turbine. This structure offers greater stability, cost efficiency and simpler logistics compared to all other steel towers. There is better availability of wind at higher altitudes with lower cost. Now coming to our H1 FY19 performance, it has been impacted due to delays in forming up guidelines and getting approvals, and most importantly, a low auction volume in H1 of last financial year, that was FY18. If you all remember, in the H1, including the February 17, there was only 1.5 gigawatts of which were completed, which is now actually come for execution. Most of the bidding happened post H1, where the timelines will be after the current period. H2 of FY19 therefore expected to be significantly better. I'm happy to announce that despite all these challenges, Suzlon is the first one to complete the entire project awarded under SECI 1 as per the original timeline, also the 6 months ahead of the revised time schedule on this. We are the only player to have met all the intermittent milestones for this project. This is a great feat, reiterating our superior execution capabilities. In continuing, we are also moving smoothly to achieve our SECI 2 delivery and commissioning timelines, despite various procedural and regulatory challenges. Work on our SECI 3 and SECI 4 projects also is progressing as per schedule. Suzlon has demonstrated its dominance even in the auction regime with the largest volume share in auctions. Our current order book of 1.1 gigawatt includes 950 megawatts of auction projects and 100 megawatts from captive, PSU and retail segment where we have a very strong presence. Incrementally, we have 700 megawatt of framework agreement, and we also signed letter of intent for 484 megawatt, part of it, which also includes the auctioned capacity. Of the 10 gigawatt of auctions already completed as we speak, ordering for 30% is yet to be closed by the IPPs. We are in active discussion with customers and shall be able to conclude over the next 2 to 3 months some more orders. Service continues to be our biggest strength. Our operation and maintenance business continues to grow in size with around 15 gigawatts of renewable capacity under maintenance. 2 gigawatt is from India alone. We are the second largest O&M company in Indian power sector, including conventional power sector, next only to NTPC. Consistently serviced all our customers and got renewables for more than 20 years. A record of every single turbine sold by us in India is within our service fold. Today we are proud to say that with 12 gigawatts of fleet running in India, and many of them are 20 plus years old, our overall fleet machine availability is 97% plus. So in the first 7 months of this year as well. During the quarter, Suzlon successfully crossed the 12 gigawatts in India, successful in retaining 35% market leadership based on the cumulative installations in India. As I said, we achieved 97% plus fleet availability. And with this, our total installations has reached 18 gigawatts. In Q2 of FY19, we sold 49% stake in our Maharashtra solar project to China Light and Power, CLP. With this, we have sold minority stake in all our solar projects and shall sell the balance 51% before end of this financial year. With our experience in solar execution, we are now well positioned in the upcoming wind solar hybrid auctions. Debt reduction, cost optimization and working capital optimization will remain our top priority for the balance period of this financial year. I would now invite Kirti to take you through the detailed aspects of our financial performance. Kirti, over to you.
Yeah, thank you JPG and good morning to all of you. The industry continued to experience transition period as we fully migrate to auction design. We delivered 281 megawatt of wind capacity during H1 of FY19, which is 47% lower YOY basis as we executed some FIT order in last year H1. In H1 FY90, we started deliveries of our SECI 2 project coupled with 100 megawatt of captive orders, thus translating into revenue of 2467 crore. Due to lower operating leverage, our H1 FY19 pre-FX EBITDA margin came in lower at 7.8%. You may notice that we continue to maintain very tight control over our fixed cost. Our operation and maintenance revenue grew by 6.5% on YOY basis to 866 crore in H1 FY19 over rupees 813 crore in H1 FY18. Our financial performance was impacted by rupees 601 crore of forex loss, which is purely translation and non-cash in nature. This is primarily due to impact of steep depreciation of rupee against US dollar on our FCCB and FCLC backed loan, which are denominated in dollars. While our net working capital is further reduced to 1,999 crore, roughly 2,000 crore, we firmly believe that our working capital in the auction regime will be significantly optimized. Likewise, our working capital debt. Our gross term debt, excluding FCCB, stands at 7,383 crore, higher by 376 crore over FY18, which is after repayment of 176 crore which we made during H1. This increase is purely due to currency impact, so there is no additional borrowing by the company. In fact, we repaid 176 crore in this H1. Our repayment schedule on all the loan is back-ended, with only 33% of gross debt is payable over 3.5 years, while 66% is payable in FY23 and beyond, allowing the required headroom for our operations to grow. In FY19, we continue to remain committed to our target of reducing our debt by 30 to 40% through the strategic initiative and operational cash flow. Our short-term liabilities increased in this quarter due to reclassification of FCCB as it is maturing in next 12 months. Thank you. Yeah, we open the floor for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Dhavan Shah of KR Choksey. Please go ahead.
Yeah, thanks for the opportunity. I have two questions. Firstly, about the stayed-on renewable energy. So as per media reports, the enterprise value of the stake sale is around 3,500 crore, and the equity payout could be around 750 crore. And I also read that there are few private equity investors like the Olympic Capital and Climate Partners. So can you please share more thoughts on that valuation, because it comes around 9 crore per megawatt, and what is the use of that proceeds? I mean, there has also been a revocation of pledge, so I also want to understand more about that.
First of all, I think Suzlon has not sold any wind power wind project, so there is nothing on a Suzlon side so far as those kind of a project is concerned. That's number one. Number two, promoter has repaid certain their personal loans and got a few shares released. So that is a statutory reporting done by promoter.
So that loan repayment is for the Suzlon side, right? I mean, from the
No. It is
promoter.
their personal loan which they have paid, and there was some share got released from the pledge by promoters, which promoter intimated to company, and company statutorily intimated to stock exchange.
So that repayment was from the stayed-on balance sheet, right?
I don't know. That is
It doesn't pertain to Suzlon Energy.
yeah, that is nothing relating to Suzlon Energy, so let's not focus on that.
Okay. And secondly, about the O&M divestment. So what is the timeline for that?
We stay committed to FY19 as we stated earlier, and we are reasonably placed on that.
So that we stay committed to the strategic initiative. We never said that specific of OMS divestment. So therefore, we stand corrected that we said that we are looking at various strategic initiatives, and we will conclude them in this financial year. We will stand by that.
Okay, so by Q4, I mean, we can see some profit from this, right?
Yes, you're right.
And is there any idea about the valuation? I mean, if you can share more thoughts on that.
Pardon?
If you can share more thoughts on the valuation part for O&M business, you can.
No.
Because I think earlier there was some deal and that was at EV/EBITDA of 10-12 times. So is it safe to assume that 5,000-6,000 crores could be the valuation?
No, we never said any of these things earlier. We also never talked about any specific divestment because as I said sometime back, we're looking at few options, and these options obviously because of the counterparty confidentiality also remains confidential, and at the appropriate time we will obviously inform.
Fine. Thank you.
Thank you. We'll take a next question from the line of Nikhil Vaishnav of VD Investments. Please go ahead.
Thanks for the opportunity. My first question related to foreign exchange loss. In H1 FY19, our EBITDA margin affected due to exchange loss. So any hedging policy are we adopting?
We do have hedging policy in the place, but unfortunately this kind of a long dated repayment loan, hedging is not economically viable. And if I add even the exchange loss, which is due to volatility, even today the rate is quite different. So if you add even the exchange loss, actual interest cost savings made by the company is also offsetting it.
If you remember what Kirti mentioned while in his opening comments, most of our debt repayment is back-ended, so we are not paying anything. So therefore, these exchange losses today is more of a transactional basis. And normally, as you are aware that when repayments are getting matured for a long period of time, then hedging may not be the right strategy at this stage.
Okay. So and just wanted your outlook and any strategy will be adopting for like in industry there is a strong commissioning of 21 gigawatts till FY21. So just wanted your outlook and any strategy we will be adopting. And in terms of revenue growth, how do you see for next 2 years? Any target we are seeing?
Yeah, see, as we mentioned, we are also seeing clearly the external reports of in September, and you're seeing ICRA report which came out a day before. And also if you see the reality, as we speak today, there is close to 10 gigawatts, to be precise, 9,850 megawatts of auctions between SECI and states have already happened. And they have been awarded to various IPPs. This is the capacity which is available for execution. Our estimate is that even in this capacity, what is already awarded, which is supposed to be commissioned partly this year, most of it is for the next year because SECI 3, SECI 4 are supposed to be commissioned in FY20, and then in fact SECI 5 and NTPC partly FY20 and balance in FY21. This year we expect the capacity to be commissioned would be not more than 2 to 2.5 gigawatts. That leaves us even the existing bid capacity. We're not talking about any new bid. Itself, an opening order book of 7.5 gigawatts, which is available for execution next year. On top of it, there is momentum picked up. If you see in H1, there is 4.5 gigawatts bidding has already happened, and they're talking about close to 10 gigawatts, including hybrid and various other things to be bid out in the balance period of this year. So therefore, as Mr. Kanti mentioned in his opening comments, you expect that after taking out whatever is going to be executed this year, availability of almost 18 gigawatts of capacity for the sector. How much of it would be executed next year would again, our expectations about, let's say, about 8 gigawatts, and something will go to FY21. So therefore, we firmly see volumes coming up in FY20 and 21 without much of hurdles. There is a firmness in the volumes now.
So, and any revenue growth target we are seeing any for like next 2 years?
See, if you are seeing, we have always been maintaining a market share of In the commissioning capacity, we have been maintaining the market share of 35% or so, and we would expect that whatever gets commissioned in this country, we would still maintain between 30 to 35% commissioned capacity.
Okay, and for SECI 3 and 4, what connectivity we will be using? Like, we will be using same connectivity or developing like new?
The orders what we announced till now on the SECI 3 and SECI 4 is for 500 megawatts with torrent and 285 megawatts with NL. Both these projects are getting connected to the Bhuj substation, and in fact that is where we are also getting connected for the SECI 2. So therefore we have more than 1000 megawatts getting connected to one single substation there, and for all these three projects, SECI 2, 3 and 4, we already have a connectivity, and the required evacuation system for connecting to PGCS substation is in progress today. And the first project to be commissioned for this would be the SECI 2, and as you know, SECI 1 we are the only people who are done on original time schedule, and I think probably we will be the only one or the two players who would actually achieve the on-schedule commissioning for the SECI 2 as well. So we don't see evacuation for up to this as a criticality. Yes, Power Grid is implementing it, we are following it up, and I think it would be available before the commissioning date of March 2019 for SECI 2.
Okay, and how much capacity will be doing in FY19 and 20? FY20?
As I said that our guidance always is that we will do 30 to 35% of the total capacity addition in the country.
Okay, and one last question.
Our guidance for the next year is that the country should achieve anywhere about 8 gigawatts plus, based on even the projects which are bid out already, because new bidding because of 21 months timeline would come for commissioning in FY21.
Okay.
And also the other factor is that not only just the bid projects, we also need to know there is a significant captive and group captive segment in the country, and we are market leaders there in both these segments, and that will add to our the capacity from the auction listing.
And what is our per megawatt realization in this quarter?
I think per megawatt realization is something which we are not disclosing separately, but approximately you can take something between 6.5 to 7 crore.
Okay. Thank you. That's all from me.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. We'll take the next question from the line of Harshit Kapadia of Elara Capital. Please go ahead.
Thank you for giving me the opportunity. So a couple of questions. On the revenue front, your revenue has grown by 4%, but when I look at your PBIT, it is negative at 426 compared to what was there even in Q1. So why was there such a high loss in the EBIT level? Could you please explain?
Primary is a forex loss, basically, which I have already covered in the speech opening remark which we have given, that primary reason is FX, otherwise operations are delivering the healthy margins.
So it would not be correct to say that the execution of SECI 1 project margins were lower than SECI 2 execution margins?
No. As Kitty is mentioning, our margins are intact. In fact, the quarter-on-quarter margins are good. The only difference what we are seeing in the EBIT is because of the foreign exchange losses what we booked, which is more of a transactional process.
If you see our slide number 13, quarter 2 EBITDA margin before forex is 9.6%, despite we have done 126 megawatt only in this quarter.
Correct, sir. If that is correct, and sir, you are guiding of a double-digit margin on a full-year basis. So what can we expect for FY19 based on your execution and your margins that you had looked at?
Strictly speaking, I am not guiding any margin. You need to make your judgment call on the basis of indicators what we are giving right now.
We are not giving guidance specific to this, but you are aware that we always said that the sustainable EBITDA margin around 14-15%. But this is depends, as you know, that we are a vertically integrated company. It would depend upon the volumes for the year. Volumes are higher or costs are low, then we make good margins, and the volumes are lower, but our fixed cost would remain different. So therefore, it's a volumes based. But individual project-wise, our margins are strong.
Okay. So second question is on your wind solar hybrid. You said it's probably going to come in second half of FY19. So right now, what is the status? So where is it? SECI is looking at it, or what has been the current?
As we speak, this bid is now due for 20th of November for 1200 megawatts of hybrid solar hybrid project. So therefore, we're talking about few days from now.
Okay. And what about the offshore wind, sir? Can you give a timeline for that as well?
Offshore wind, no, I can't give the timeline, but what is in the public domain, the government was talking about is the bid coming out in December, which they said sometime back, so we've not heard anything revised, so therefore till anything new we hear, December is the beginning.
Okay. Okay. And sir, in initial remarks, you had mentioned that you are looking at India's total market of India of 8 gigawatt in FY20. Could you break this in terms of SECI, state, and your captive?
Yeah, see, my simple point here is that, as I said, today 9850 megawatts is already auctioned.
Yes.
Starting from February 17th to till let's say the September, which was the last SECI bid happened, both in SECI and the state level. Okay. So predominantly it is in SECI.
Okay.
In this 9850, the SECI 1 and SECI 2 are scheduled to be completed in this financial year, but I don't think as you know, the SECI 1 itself is delayed, except nobody has completed the full project till now, and the SECI 2 is March is the date. First week of April is the date, but it's as good as March is the date, but I think only we would complete on time, so these will slip. So our expectation is that as a country we will do around 2.2 to 2.5 max megawatts in this year. So therefore, about 7.5 gigawatts of existing bid-out projects itself would be available for execution in FY20. On top of it, you will always have 6 to 700 megawatts of captive and group captive segment. That is the reason, even without any further bidding happening, that you will have an 8 gigawatt market available for the next year. And on top of it, so there will be some FITs, some state level commission, also state level projects also will come up.
And sir, is the transmission issue related to SECI 3 auction? Is it now? Is it over, or we are still finding that that transmission corridor is not ready?
See, as far as granting the connectivity is concerned, now the connectivity has been granted up to SECI 4 for all the projects.
Okay.
It depends upon who is doing projects where. As I said, that we are doing projects of SECI 2, 3 and 4 getting connected to Bhuj substation in Gujarat. Okay.
Right.
Where the execution of Power substation in progress, and their current schedule is December 19 to complete that. Sorry, December 18. And the commissioning of SECI 2 is scheduled for March 19. So it's before that. And anyway, SECI 3 and SECI 4 are subsequent to that. So therefore, I don't see an issue there. While I'm not trying to undermine the issue of evacuation, but that was initial stages. Now at least the power grid knows what capacity is coming where, which substation is to be augmented, it's under progress, and I think I don't see that as a major challenge.
Okay, so you have also mentioned there is a letter of intent that you have received of 484 megawatt, and you said it was largely for the auction. So can you quantify?
I didn't say largely. I said also includes auction capacity.
Okay.
So therefore, our policy is to consider as a firm order after we sign the contract and receive the advance. So and the people, everything is in position. So we will be shortly announcing the firm orders for these 484 megawatts individually. So right now, this is a letter of intent signed, and we are in the process of finalizing the contracts with various clients.
Okay, so can I expect 50% of this order is from auction, or?
You will not get an answer from me on that.
Okay, no problem.
Except saying that it includes some auction capacity.
Okay. Sir, what about the resolution of 700 megawatt we have in the state framework order?
Yeah, that is in the state of Andhra Pradesh. As I mentioned last time, under Section 62, we filed the tariff petition with the Regulatory Commission. So the application scrutiny is under progress. They had some more inputs required from us as well as the distribution company. All of them have been submitted now. So we expect that the application would get listed shortly, and the process of hearing and finalizing the petition about the tariff should happen in this financial year.
In this financial year. Okay. Okay. And sir, if you can also highlight on your divestment plan, which you had earlier mentioned, in Q3 you will be probably announcing something. So can you...
Not Q3, I think we said this financial year, in this financial year, which is what Kirti answered in the previous question, that we stand by the guidance we gave earlier. In this financial year, we'll be doing that.
And will that also take care of the FCCB repayment that we are scheduled for the next year as well? Or
If you want to comment?
Yeah, obviously. That is the plan.
So that is the plan. Okay, sir. Okay. Thank you.
Thank you. Our next question is from the line of Mohit Kumar of IDFC Securities. Please go ahead.
Yes, sir. Good afternoon, sir.
Good afternoon.
My question pertains to the auction pipeline. So SECI 5, I think it was curtailed to 1.2 gigawatt, and SECI 6, I think the 2 gigawatt tender is out, and most of the capacity, most of the substation where this capacity will get added is mostly in Tamil Nadu, Maharashtra, and AP, if I'm right. So what is stopping this SECI 6 to go ahead?
I don't think there is anything stopping on that. I think they are doing sequentially. Right now they are doing that's my view. Right now they are doing the hybrid. Okay? Because even when we do the hybrid, the wind sites also will get locked up. Okay? And one of the requests we always made to the government was that please don't do two auctions simultaneously, because we bid for one auction and site gets locked up and we don't know whether we'll get that or not till the reverse auction is done. So the next bid comes before the reverse auction of this bid happens, then we don't know whether that site to be offered or not to be offered. So therefore, because of that, they're going one after the other. One reverse auction gets completed, then they're announcing the next bid to happen. So right now they're concentrating on the hybrid, which obviously includes the wind, which as I said is 20th November. And we're sure that once that is over, they will announce the SECI 6 bid on this. And as far as the transmission capacity is concerned, as you are right, even today there is an open capacity of more than close to 2 gigawatts in Karnataka, there is close to 2 gigawatts in Maharashtra and some in Tamil Nadu as on today. Plus there is, if you see the Power Grid's plan, there is a significant capacity addition what they're planning in this next 3 to 4 financial years till FY22.
And sir, there was a bid from Gujarat, 1.1 gigawatt, if I'm not wrong. Has the bid been postponed, or is it happening?
What we heard and what we've seen is that they have proposed some changes to the bidding documents. And under the law, if you are not using the standard bidding conditions, if you are taking some deviations, so those deviations have got to be approved by the Regulatory Commission before you call for bids. So therefore, they have gone to the Regulatory Commission for getting those deviations approved. The Regulatory Commission has now asked the DISCOMs to incorporate those changes and submit a consolidated bidding documents. And once I think that gets approved from the Regulatory Commission, they'll come out with the bidding.
So one last question regarding order book. So why there are so many capacities in SECI 3 and SECI 4 and SECI 5 are still not tied up? I think this is already 3, 4, 5, more than 4 to 5 months for some of the orders.
Actually, we are on the other side of taking the orders, of not giving the orders. So therefore, I wouldn't be able to say why. But I think the question is that now today, because there are sufficient timelines for everybody, because it's 21 months from LOI, so there is no immediate pressure on people saying that we need to order it today. But I think all of them will get awarded in the next 2 to 3 months' time.
So one more question, if I squeeze in. since the for the Q2 was very sluggish for us, and Q3 and Q4, given the fact that they only SECI 2, I think we had 50 megawatt of SECI 2 which is pending, and rest are SECI 3 and SECI 4 and state bids. So how do you think the H2 will pan out? Will we see something substantial volume in H2, or do you think the FY19 will be a difficult year for us?
So, see, I will not. First thing is the one change. What's happening in the sector today is it's no more a financial year. Okay. It's no more a financial year related issue on this, because financial year volumes were important when we were doing the FIT regime, where the tariffs were valid for a particular financial year, and you've got to take the order and complete by March. Now the orders are for a contract period of 21 months, whatever is the SECI is saying from the NOI date. So therefore, there is now that financial year is a blur. There is nothing of this. So that's the reason, as I mentioned in my opening comments, if you see H1 of last financial year, there was hardly any options happened. It was only 1.5 gigawatts, including SECI 1, which got option in February, if I consider that as H1 of last year. And that capacity, as you rightly said, is getting executed today. While we have a considerable order book today, and we continue to build this order book more than on this, because as we said that there's more than 3 gigawatts of orders not finalized, awarded but not finalized. But the execution of that is, the contractor schedule is 21 months. So therefore, we can't really exactly say when they'll get commission, but they'll get commission in 21 months. Also, some of the clients, they take their time to get the financial closure done, and some of them want to save their IDC. They want to push the project execution to the later date. So therefore, our expectation is that the maximum volumes will pick up in FY20 for the projects which are already awarded. So there will be an improvement compared to H1 and H2. But if you see the SECI 3 and SECI 4, because you said SECI 2, SECI 2 anyway has to get completed this year. SECI 3 and SECI 4 is, the SECI 3 is December is the commissioning, December 19, and SECI 4 is the commissioning is 4th April or something. So, but let's say March. SECI 3, SECI 4 is the next financial year. And if you take NTPC and SECI 5, they are July 20. So some capacity of that might come in FY20, but some of it will go to FY21. So from that angle, there will be a firmness of the orders, but execution would depend upon between us and the clients and how do we want to execute, because there is a sufficient time period.
Okay, sir. Thank you, sir.
Thank you. We'll take the next question from the line of Murli G, an individual investor. Please go ahead. Murli G, your line is unmuted. Please go ahead with your question.
Hi, this is Murli.
Hi, please go ahead.
Just want to know what is the plan for CDR exit, and because for the last couple of years we are saying we'll be exiting it, but are we on target for this particular year?
Yeah, it is linked with the strategic initiative we talked about. So both are coupled together. It will go together in this manner.
So we are still on target for this year, right?
Yes, that's correct.
Okay. So, and the second one is like related to the debt reduction. So we are targeting for 30 to 40% debt reduction in this financial year. So does it include the gross term debit, or including everything, whatever we have in our debit list?
Yeah, you can assume on a total basis it will be 30 to 40%.
So in this case, like total is close to around 10.5 to 11 crores. So are we expecting something around 30 to 40% in that?
That's correct.
Okay. So another quick one, like on the offshore capabilities, right?
Yeah. Any question on
that? Yes, I just want to know, like, are we ready for the bidding and other things, or are we ready to get involved in the execution? Like, how far we are ready with that offshore
we as a company have the experience of offshore because we had a company within the group earlier which was very strong in offshore execution. So therefore, as a company, though the company is not with us right now, but we did do the experience. Most important is a lot of senior executives who have implemented offshore are right now with us in our technology as well as in the project. Therefore, we do have a capabilities for offshore, and we are the keen on offshore. And as you know, that we are the only people who actually created for offshore data collection in the country, other than the government of India. And once the UI has come, we, as you know, that we have also put in our UI, and we do have a strong marine partners with us, and we are focusing on getting prepared also with for offshore.
Okay. And just last question on repowering, like what exactly is the plan? Is there any update on the policies or anything like that, or when we are expecting it to be, there will be some information on that repowering thing?
See, the repowering, even the government of India is now looking at re-looking at the repowering policy, because there is a repowering policy which was issued by government of India earlier, which was more for when there was an FIT regime. Okay. Now, when it comes into the bidding regime, there still some changes are required for that. Right now, we are looking at repowering mainly for the captive segment, which is more easy for us to do on this, and also we are looking at repowering of some of the people who have an FIT PPS with the states, if the states are, if they can renegotiate with the states. So that's where, but significant portion we're talking now is captive people, which makes immense sense for them to repower.
Okay, do we have
just to add on that, when we talk about the opportunity of repower, it is bigger for us due to largest installation in the country is under service data.
Okay. Sure.
Thank you. Our next question is from the line of Manish Kanakia, an individual investor. Please go ahead.
Hello.
Yes, please.
Yeah, what is the forex dollar rate which we have booked the loss on?
Roughly the movement between last quarter and this quarter is about 4 rupees.
So the rate could be 72?
No, roughly what was there on 30th September is the 72.50, if I remember correctly.
And the 3 gigawatt order which is not finalized, can you give me a breakup between SECI 3, 4 and 5? What are the pending on?
Yeah, this 3 gigawatts pending is entire NTPC is pending. Entire SECI 5 is pending, which is 1200 plus 1200, 2400 megawatts. And to our knowledge, there is something pending in SECI 4 and something in Maharashtra bidding. But predominantly 2400 megawatts is the latest rounds of bidding of SECI 5 and NTPC.
Okay. 1200, all right. And
1200 plus 1200, 1400 megawatts, 2400 megawatts.
Do you see this order inflow slowing in the Q2? Because I don't think we had much orders which came in Q2.
No, in the Q2, as we said that, that's what I said, that there is 10,000 megawatts of capacity which is awarded to various IPPs. Obviously, all this is to be executed from now to, let's say, July 2020. So they have to get awarded. There is sufficient time for execution, so therefore, some cases people may take their own time to award. As we said that in this quarter, there were discussions, and we also said that we signed an LOIs for about 500 megawatts, 484 megawatts to precise, and which is now getting, once it gets converted into contracts, we'll obviously announce the specific deals. But till then, we won't take it as a firm order book and announce. But there are discussions happening with people, but because of 21-month time schedule, the people take their own time to award.
So Q2 actually there was no order one, right?
Except that, no, we had the LOI signed for 484 megawatts in Q2. Plus there was captive orders.
Okay. So what was the captive order received in Q2?
It was, I think it's about 48 megawatts. No, we don't, I don't think we give a breakup separately, but Is it? Yeah, see the, how much is it? 99 megawatts. And that is the backlog of as on September 18, it is there in the slide 17 of our pack.
And what was the commissioning in Q2?
Commissioning in Q2 is that if including what we have done of SECI 2 is the 319 megawatts, but the SECI 2 the capacity which we started commissioning somewhere around the 25th, 26th of September, but it went on till 7th October, but we consider that as commissioned in this quarter, so it's 319 megawatt.
119 megawatt commissioned in Q2.
Yeah, including 250 megawatt, which is actually the date is 7th of October.
So would that be the revenues to be reflected in Q3 or Q2?
Well, the revenues means revenues will be milestone wise. It's progressive payment. So therefore, it is not that when you're executing a project over a period of 15 to 18 months, the revenues keep accruing it progressively.
Okay.
Revenues for the generation, revenues for the client will accrue once the project is commissioned. But as far as we are concerned, we accrue our revenues progressively. In fact, the moment orders finalized, our revenues start coming in terms of initially through advance and then supplies, then progressive commissioning.
Sorry, just to correct that, what JPC talked is a cash flow. Revenue is on a turbine revenue. Once we dispatch the turbine, we book the revenue for turbine. And once we complete the project related milestone activities, we book the revenue for respective milestone.
So I think last time you said that 75% is booked on turbine dispatch and 25% is booked once we execute the commissioning is done.
Various milestones. Commissioning may be a smaller milestone.
It depends upon, it is not that way. It depends upon what is the value of the turbine supply and what is the value of the balance of plants. It varies from project to project. It depends upon the scope of the project. So, but the way we book the revenue is as Kitty said, that once the turbine is supplied, so we book the revenue for the supply portion, and then once in project there are various milestones we complete, and we'll keep booking the revenue for the project portion of it.
This is seeing, usually we say we will maintain a market leader position, but if you see that total 10 gigawatt was auctioned for 9,800 watts, and we have won approximately 1.4 gigawatts, so that's just 14% if you see.
Okay, including the LOAs, what we received and everything on this, whatever is finalized today, on the finalized portion I'm talking about, we have a 25% market share and we continue to be the market leaders with respect to that. What is important for us to note that now is that the market is now has multiple players. Okay, not like 2 or 3. There are multiple players of 5, 6 on this. So therefore, in that scenario, to have 25% market share in the award bid projects is a good. We continue to be market leaders even in the auction bidding.
And just to correct your maths, we have auction-based orders of total 1735 megawatt out of 7,000 roughly orders.
Okay. Just want to know, do we import any raw material?
We do.
So how much is that percentage? Because that would also affect our dollar loss.
It is not impacting in a value terms. We are able to maintain that on an overall cost basis. Primarily we import steel and those kind of material. Otherwise we import very small components, not very big size components.
That increase in dollar cost wouldn't impact much.
Yeah, because those kind of value we are able to get proper pricing corrections from our suppliers also. So overall basis we are neutral.
And also what we do is we don't just import when we need sort of thing, and we keep looking at the market when there is a dip in the market. So we import and we keep doing a long-term planning for our raw material procurement rather than looking at when there is a need, we just procure.
Right. Thank you. That's it.
Thank you. Our next question is from the line of Dhavan Shah of KR Choksey. Please go ahead.
Yeah. Thanks for the follow-up. I have one question, and we are very much optimistic about the wind sector outlook, and we are expecting around 8 gigawatt next year, and thereafter around 10 gigawatt per year. and assuming that our market share will remain at around 25%, so I think we should do around 2,000 to 2,500 megawatt per year, and that should give some operating leverage as well. And apart from this, we are also planning to reduce our debt via divestment of stake in the O&M business. So that will also reduce the interest outgo, and that may improve the overall bottom line picture. So assuming that everything is good, then why are we not, buying the shares from the open market? I mean, maybe it is. Don't you think that the stock is undervalued right now?
Your second portion, Kirti will answer. Let me answer the first portion of it. It is not that we are optimistic. As I said in my opening comments, it's a fact. As I said, today 10 gigawatts is bid out. It's not no optimism about that. It is a reality. 10 gigawatts is awarded today, and out of that 2 to 2.5 gigawatt will be done this year. There is 7.5 gigawatts available to be completed under the contractual schedule next year. Okay? So there is no optimism of when we say that 8 gigawatts we will do next year, because 7.5 gigawatts of this plus the captive plus any state sector 8 gigawatts, which is mandatory for us, for the country to do it under the contractual schedule. You don't need any optimism for next year. Then whatever gets awarded from now for over the next 12 months is what is available for the subsequent years. Even that we don't need fully. Let's say another 8 to 10 gigawatts even gets awarded between now and the next 12 months is available for FY21. It is not the really optimism. And second correction is that when I said there are two different factors. In the commissioned capacity, we always maintain anywhere up to 35% market share. There's a difference between getting awarded market share versus the commissioned capacity market share. So therefore, the last year also we maintained 35%. Today also in the country as a whole, if you look at it, on a cumulative basis, we have 35% market share, because if you look at 34 gigawatts, what is installed in the country today, we have 12 gigawatts. So we're maintaining 35% market share on the installed basis, which we continue to give the guidance in future as well. So therefore, these two are two different factors of booking the order versus execution. Because orders will come, but because they won't be anymore a calendar year basis. So therefore, let's not get confused with order book percentage versus calendar year execution percentages. They'll be different.
Coming back to your question on a share price, unfortunately, we will not be able to comment on a share price of the company, whether it is right or whether it is undervalued or overvalued. That is something which market and analysts need to decide. That is one. So far as a promoter or anybody buying the shares in the market is concerned, basically that also is something where I am unable to comment. But definitely I can say that when we are working on certain strategic initiative, regulatorily I cannot allow them to do any transaction having a strategy.
Yeah, I mean, if promoter buys some shares from the open market, I think it can revive some investor sentiment. Right? That's what
I need to be mindful about regulatory environment also. I cannot be dealing in the shares when I have insider information.
Fine.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference to Mr. Tulsi Tanti for closing comments. Over to you, sir.
So we appreciate your interest in the company and the concern with respect to the dynamic situation of the industries in the recent past. The industries is at an inflection point where the growth rate will be significantly very high over the next couple of years. India is positioned to witness the more than 35 gigawatt of wind auctions over the next 3 years. We are also quite confident out of that, at least 30% we will achieve the business out of the next 3 years. With this, FY20 will be 8 gigawatt in terms of the capacity addition on a commissioning basis, but on auction basis it is a 10 gigawatt plus. This will improve the business visibility and predictability of the cash flow. Not only that, because of this continuous inflow of the biddings and the continuous growth of the high volume, it will reduce the working capital requirement also, and it will help us to expand the volume without any additional working capital requirement. The Suzlon is the best position to benefit from this huge opportunity given the competitive business model, end-to-end solution provider and fully vertical integrated supply chain. The strong project executions expertise spanning over the 2 decades and in-house project acquisition capability. The superior technology displayed through our new generation turbine, which offers the higher energy yield with the low cost per kWh. Our presence in all India basis, and it is a proven track record of the last 22 years. The vertically integrated operations can add lot of value to execute the certain business development on a faster way. As you know, we are the second largest in the power sector for the service of our turbine fleets after the NTPCs, and best in class service, and that is giving a lot of added value, which is a large utility company of the international market entering in the Indian market. They prefer Suzlon as a best partner because of our international operation relationships. The technology and innovation, which are our key strength, will continue to act the catalyst that will drive growth in the renewable energy sectors. We strongly believe the long-term stable and sustainable growth for the next 5 years. Through technology and the large volume will continuously enhance the profitability. The service business will witness the good growth due to the larger volume, which will in turn lead to the better margin over the next 5 years. Based on the call and discussion with our discussion, I found 2-3 concern areas for the investor or analyst. There is a huge uncertainty information about the grid connectivity in the country. The today 35,000 megawatt the plan for the next 3 years, and PGCL has already prepared the comprehensive plan for 35 gigawatt where is possible. Already they have released the 20 gigawatt capacity plan in a different substation and different states. So there is a strong visibility of the connectivity is there. Only what is required is there to interface the project and connectivity is the OEM responsibility, which we are working and connecting all the project in time, and each project bid has a minimum sufficient time of 21 months. So we should forget about the grid connectivity concern or risk or any areas on that part. The second is SECI 678 is already the plan has government 2,500 megawatt each the bid in a December, January, February or March the SECI 8. 1 gigawatt is in a Gujarat bid is in a pipeline, 1.2 gigawatt wind solar hybrid and 1 gigawatt is offshore, all put together before March. The minimum 10 gigawatt bid will be added. So the end of the year, after assuming the 2 or 2.5 gigawatt utilize the commission the projects, so 18 gigawatt business volume is available end of this year, which is giving a strong visibility of the next 18 months. So that is bringing a new dimension of the sector, stability and long-term order books, and the strong the stability of the each quarter, the volume and everything, which will bring down the substantial working capital requirement. And because of this volume and the period cycle is reducing on a project execution field, which will increase the profitability and reduce the certain cost level also. So we see the good win-win situations for the industries, and as you know, the Suzlon is well positioned. So will continue to capture the growth and opportunity to bring the long-term stability for our company and all our the stakeholders. With that said, I thank all of you for joining us on the call today, and we hope all your queries are answered. In case you have any further question, kindly get in touch with our investor relations team. Thanks a lot, and thanks. We appreciate your time and presence with you. All the best.
Thank you very much, members of the management.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.